Hello traders, I would like to welcome you in today's webinar. Today's webinar, it's a very important webinar, and it's our second webinar for 2016. The topic that we are going to discuss today is really critical. Since the introduction of Forex brokers, there has been a confusion among traders whether a broker is considered to be a trustworthy one, or is just a broker that at the end of the day wants the trader to lose money. So today's topic is choosing your broker wisely. So we are going to discuss what are the advantages and disadvantages of various types of brokers. And at the end of the day, we will come to the conclusion which is the best type of broker that we can trade with. Okay, so we will start with the actual presentation. Just a brief introduction of Argusfx, our today's host. Argusfx is an STP and an ECN broker, and we will see in the upcoming slides what do we mean by this definition. But in a summary format, in a brief way, Argusfx is a broker that benefits from the client's trading volume. And this is very fair because it's a win-win situation with the client or the trader. By trading with Argusfx, you will obtain the relevant benefits such as the MT4 platform, full customer protection, a regulated broker, spreads, no charge on deposit and withdrawals, instant funding withdrawal, which this part is a very critical part every broker must have, instant funding and withdrawal, multilingual support in different languages, expertise, private coaching, financial updates, and another very important parameter, the security of funds. You want to make sure that the amount or the funds that you have deposited with your broker are safe. And the conclusion at the end of the day is that an STP ECN broker is the very first step to fairness. Let's see our today's topics that we're going to discuss. The types of brokers, dealing desk, no dealing desk, and a breakdown, a categorization of the no dealing desk into an STP broker, an ECN broker, and why the combination of the two, STP broker and ECN broker, is the best combination for a trader to trade with such a broker. And at the end, the most important checks you should perform for choosing your broker, our checklist. Through this checklist, you will be able to identify what are the major ingredients that make a valid and trustworthy broker. Okay, let's see in a summarized version the three types of brokers, which the second and the third type are merged at the end. Let's start with the market maker. The market maker is a broker that has a dealing desk. For the majority, let's say, it's the so-called dealing room with the dealers. One major feature of this broker is that it often takes the other side of the client's trades. And we are going to see in a more detailed explanation what do we mean by taking the other side of the client's trades. And we're going to see, is this fair or not? The second type of broker is the so-called STP, straight through process. This type of broker hasn't got any dealing desk. And one major characteristic of this broker is that it connects the orders of its clients directly to the liquidity providers. The third type of broker, which is actually related to the straight-through process broker, is the so-called ECN, Electronic Communications Network. And the major characteristic of this is that the broker charges a very small commission for trading, which this is very fair, charging commissions on clients' trades. So the broker can survive and the trader can survive. It's like we're having a win-win scenario. And the fourth one, the fourth, let's say, type of broker, it's a combination of an STP and an ECN. So to bring the two together, the major characteristics of an STP and an ECN broker is that the client's orders are linked directly to the liquidity providers, and this type of broker charges a commission on each trade. So actually, we have the market maker, which is the dealing desk, and the STP and ECN merged together. But let's see in a more detailed view these four types of brokers. So to start with, we have the dealing desk. This is the so-called market maker. This is the biggest fear that the majority of traders have, trading with a market maker. And the majority of brokers, they're market makers. And you are going to see the big difference that a market maker has compared to an STP ECN broker. Let's see these bullet points here. Number one, clients do not see the real interbank market rates. In other words, if the broker is a market maker, they can give their own rates to the client. And we're going to see exactly what do I mean by saying giving their own rates. Of course, the market maker makes money through spreads, which this is the fair view. This is how brokers should be, making money through spreads, through commissions. They provide liquidity to the clients. So this is one major difference a market maker has. They provide liquidity to the clients because they say, these clients, they will lose anyway. So they create a market for the clients. So since they know that this category of traders, they will lose their money, they do not pass the trade to the liquidity provider. They, let's say, get the trade on them. They risk their own funds, the market maker, through the dealing desk. So instead of passing your order to the liquidity provider, the banking institution, they take, let's say, your bet on their hands. So by taking your trade on their hands, what they wish is that you will lose your money at the end of the day. So let's say you have deposited $1,000 with a market maker, and this market maker sees that throughout time you are losing. You have a biggest percentage of losing trades. What the market maker will do, they will say, okay, he deposited another $1,000. Likely he will lose again all the money. So once you place your trade, they do not pass your trade to the liquidity provider. They take the bet on them. It's like when you go to the betting shop and the guy at the betting shop knows that most probably your bet will lose. So he takes the risk. So he's hoping that you will lose so that he can get your whole deposit. And this is the same with the market maker. If the market maker knows that, for example, John, he has deposited $1,000, but he will lose them, he takes the whole bet on him. So the market maker takes the whole bet on him. He does not pass the order to the liquidity provider. And once you lose your $1,000, it goes to the pocket of the market maker. So in this case, the market maker hopes that you will make wrong predictions, that you will make a wrong speculation, and you will lose your balance, or you will be losing trade by trade. And I'm asking you, is this fair? Of course not. And out there are plenty of market makers. But let's cut the long story short and move on to the next bullet points to get a clearer view. What do we mean by a market maker? So as we said, it often takes the other side of the client's trades, provides both buy and sell quotes, fills both buy and sell orders of the clients, and indifferent to the decisions of an individual trader. So sometimes a market maker can do the following. Let's say John has placed a buy order on the euro dollar, and the market maker already knows that John's prediction was wrong. The market maker can also perform the reverse trade. So the market maker company can benefit from that. So a market maker is a brokerage company that often takes the other side of the client's trades, categorizes clients, that these clients likely they will lose, these clients they are okay, the other clients though that they are very good traders, they follow their trades. They follow their trades so that the market maker also makes money. Okay? Let's move on to the other side, the no dealing desk. In a brokerage where there is no dealing desk, the broker charges a very small commission for trading. This is fair enough. Getting the commission from every order that the trader places on the platform. This is very fair because the broker has to make some money, whereas also the trader can make money by winning the trade. But what a no dealing desk broker cares for is to make the commission, which is a very fair thing to do. It does not, and I repeat, it does not pass the client's orders through a dealing desk because it hasn't got a dealing desk. Does not take the other side of the client's trade. And a no dealing desk broker, which we are going to see in the next slide, is broken down into an STP and ECN or merged together. So a no dealing desk broker acts as a bridge builder, connecting the trade, which the trader executes, to the liquidity provider. So I am John in this case again. I place $1,000 deposit on my no dealing desk broker. As soon as I execute my trade, my order goes directly to the liquidity provider so that I can get the best possible bidding or asking price. Sometimes the no-dealing desk may put a markup by increasing the spread slightly. And most of all, and the most important thing, wants the clients to profit. Win-win. Because the more the client profits, the more lots he or she will place on the orders. So the more the lot size, the more the volume a trader places on every order, the more the commission for the no-dealing desk broker, and educates the clients for the best possible outcome. Because a no-dealing desk broker wants the clients to profit. Because if a client loses and he will not deposit again, then there will be no commission for the no-dealing desk broker. So the more familiar the trader is with the trading environment, the more educated a trader is, the more the probabilities that that trader will perform and execute profitable trades. So you can see it's like the previous slide was a negative one. And I do not want to create a picture that market makers are the bad guys. But what is not fair is to hope that your client loses, to take the bet, to take the trade on you. Whereas the no-dealing desk broker acts fair. He's a long-term thinker. Because market makers, guys, they want to make money today. They want to make money in the short term. Whereas a no-dealing desk broker thinks of the long term. A no-dealing desk broker wants to create customer satisfaction, loyalty, a long-term relationship with the trader. But let's see the categorization of the no-dealing desk broker. So at the moment, we have seen the market maker characteristics. Now we're going to see the no-dealing desk characteristics in a breakdown. Because, as most of you know, we have market makers and STPs, ECN brokers. So the no-dealing desk is categorized under two headings. Let's see these headings. So the first no-dealing desk breakdown is the straight-through process broker. And you also saw before some bullet points, but we are going to explain how your trades are allocated to the liquidity providers. So as we said already before, a straight-through broker or an STP routes the orders of the clients directly to the liquidity providers. The liquidity providers have access to the interbank market, whereas in the case of the market maker has access to the interbank market. And STPs usually have many liquidity providers. And why do they have many liquidity providers? Each provider gives, let's say, quotes, its own bid and ask price. So let's assume that your broker has 3 liquidity providers, which, as we said, liquidity providers are banking institutions which they have the capital to cover up the leverage which you are placing on your trades. So let's assume that broker X has a liquidity provider A with a bid price of 1.2998, and an ask price of 1.3001. Liquidity provider B has a bid price of 1.2999 and an ask price of 1.3001. Whereas liquidity provider C, sorry for my B, it has a bid price of 1.3000 and an ask price of 1.3002. So at this stage, we are trying to see which prices will be given to the STP broker that this STP broker will show on the trading platform. So at the end of the day, what happens? The best prices are chosen to be shown on your trading platform. So in this case, we have 3 liquidity providers. So liquidity provider A gives, let's say, the best ask price, 1.3001, because 1.3002 is the worst asking price. Whereas liquidity provider C gives the best bidding price, 1.3000. So basically, if your STP broker has 3 liquidity providers or more, the prices that you'll see on your trading platform are the best prices, the best bid price and the best ask price. Because as we said again, it's all about fairness, to get the best possible price for the trader. Because as we already said, an STP makes money through commissions. So an STP wants to give the best possible price for the trader to trade and for the broker to make the commission. Let's see a second breakdown of a no-dealing desk, which you will see that an ECN broker and an STP broker are one same thing at the end of the day. Because as we said before, we have the market maker or the STP and ECN broker. So the electronic communications network allows the orders of the clients to interact with the orders of other participants in the ECN. So we are talking about the market here, a huge market. And the participants could be banks, big banking institutions, retail traders like you and me, hedge funds, investment companies, and even brokers. So you see, even brokers, they get involved in this market. And these particular brokers are mostly the market makers, which they take the client's orders or which they take the bet on them. And an ECN broker allows the clients to see the depth of the market. It's very critical. Allows the clients to see the depth of the market. Open book. These are my liquidity providers. These are the liquidity providers which I get my bid and my ask price, which are shown on my platform. And ECN brokers are usually getting compensated through a small commission. So you can see that an STP broker and an ECN broker, they are merged. It's one type of a broker, and another type is the market maker. So we have the market maker or the ECN STP broker. Let's move on to the most spicy part. This is just to, let's say, identify the major areas why an STP ECN broker has a major advantage when it comes to fairness over a market maker. So the STP or ECN broker benefits from the client's trading volume. So the more the client trades, the more volume the client places, the bigger the commission for the broker. Isn't this fair? Of course it is fair. Let's go to the second bullet point. On the other hand, when the broker is a market maker, it creates the market for its clients and often takes the other side of the client's trades. So you can see a big differentiation here. And you're going to say, what's happening here? Why the market maker wanting me to lose money? Why does a market maker want me to have a losing trade? And the third bullet point, if you lose your deposit through your trading activity, the market maker takes it all. So the market maker makes commission from the spreads, makes commission from your trading volume, and can also get your whole deposit if they take the bet on them. So they get 3 times your money. Commissions, how many number of trades you are placing, and your whole deposit if they decide to take your bet. And I'm asking you, is taking the other side of the client's trades ethical? Well, by just looking at this slide, we already know the answer. It is morally unethical. Let's see now a very spicy slide. And maybe most of you, through your experience with various brokers, you have went through these bullet points in real life. So what are the checks that we should do when choosing a broker? Number 1, we should choose an STP ECN broker to trade with. Why? Because we want fairness. We want the right allocation of our trades between us, the traders, the platform, and the liquidity provider. Number 2, is your broker regulated? Because it has been for some years now, many brokers have been introducing themselves without having the relevant regulation. And this is something to consider, because if your broker is regulated, then you are regulated too. You will feel safe. Number 3, if your broker delays your withdrawal request, well, guys, something is wrong. I'm not telling you to execute the withdrawal request within 30 minutes or 1 hour, but at least within a day maximum, a request should be already executed. Because there are cases of brokers which they find all types of excuses not to give you your money. I want to withdraw, let's say, $500, and maybe my broker delays with different types of arguments. But trade more. But you have to do this. We have these issues. Do not accept any delay in your withdrawal request. Withdrawing your funds the right time and when you want, because you are the client, you are the trader, you have every right to withdraw your funds. The fourth bullet point goes to the market makers. If your broker is offering bonuses, this broker is likely a market maker. We will take you to the moon and back. We will give you this. We will give you that. And highly likely, as you all know, these bonuses are not withdrawable. So let's say I have $1,000 in my account and I get a bonus of $500. These $500, they intrigue me to trade more. But at the end of the day, when the broker will see that this $500 which they have given to you as a bonus is likely to disappear or vanish because of a wrong trade, they might close your trading activity even earlier, so that will not lose their bonus which they have given you. Another important bullet point: does the broker of your choice have good customer reviews? What do the customers say about the broker? Are they happy? And when you are checking for customer reviews, always try to find the negative feedbacks and try to see whether your broker was able to fix those negative feedbacks in its operations. Another very important bullet point: has your broker got fined or faced any regulatory penalty so far, and why? If there is a penalty, let's say that it can happen, but it's not at the expense of the trader, then the broker can bear with it. It's not an issue. But if this penalty has to do with the traders, this is morally unethical and unacceptable by the broker. Do you get the necessary customer support? In other words, does your broker provide you an environment where you feel safe, that you understand what you are doing? Does it give you the necessary support? Are you able to trade? And in the scenario you have any questions, any time to get the right answer? And does your broker offer fast execution on trades? Because at the end of the day, you want, as soon as you press the button, for your trade to be executed without any delay. Sometimes there might be delays, minor delays, due to the connectivity matters and communication issues like this. But this should not happen on a day-to-day basis. So when you choose your broker, don't just get excited with the bonuses that they might offer you, with promises that cannot be met. Choose a broker that you will have a long-term relationship with, that you will trust, that you will feel secure, and a broker that has a long-term appearance on the market. So these points of this last slide could be your checkpoints, could be your list for choosing your broker wisely. So our webinar has come to an end. I hope you were able to understand and differentiate the difference between a dealing desk, which is the market maker, and the non-dealing desk, which is the STP ECN broker. I would like to thank you for your time. This time I have included in the last slide also the website of Argusfx. For any questions, anything that is bothering you, anything that you need advice on, you can always contact support@argusfx.com. Next webinar is this Friday. So this Friday we are going to leave from the theoretical concept. Like our first webinar was Introduction to the World of Forex. This webinar was Choosing Your Broker Wisely. Our Friday's webinar, at 4 Eastern European time has the topic of trading like a pro, the basics to know. So we are going to go actually on charts, practicals, what you need to do to be able to trade the markets with confidence, with patience, with discipline, and have a long-term perspective when trading this fascinating world of Forex. I'm ready for any questions that you want me to answer. Any questions? Was everything clear or something that you want me to emphasize more? We have a very nice question here. What about brokers that have traders compete each other? Well, of what I understood, you are talking about mirror trading. Well, mirror trading, it's indeed a competitive environment, and it's not a bad thing actually for traders not to compete. Actually, traders should help each other. There should not be any competition here. Because at the end of the day, we are all retail traders. Retail traders, they should support each other. But there are sometimes that there's these competitions, which these competitions are again done by the market makers sometimes. Why you think so? Because if you get the first place, you will win certain bonuses. But if it's a fair competition, like mirror trading, for example, it's a fair competition. You trade, if you go to the first rank, you have followers and things like that. But if the competition is done by a market maker just to give you the spice, let's say, to win a bonus or bonus money and stuff like that, then I will not be in favor of this, let's say, competition. A fair competition, as I said, could be the mirror trading. Who is the best trader or who has the best trades? It's fair. I hope I was able to answer your question. If there is something that was not answered, feel free to answer me again. No problem. We have more than 10 minutes to... Okay, we have, please, I did not attend this webinar from beginning. Is there a record for this webinar? Yes, sure. Once this webinar is done, we will record it and we will inform you where you can find this webinar so that you can have a look at your own time and your own pace. Other questions? Thank you too. So everybody's clear what is the difference between market maker or an STP broker? All seems clear, right? Let's wait for 1 more minute or 2 minutes for any more questions that may appear before we close this webinar session. And it's really important that you do your homework. before either choosing your broker or deciding to trade. Have a strategy to feel comfortable and confident that you are on the right path. Is it possible to trade without spreads? Unfortunately, it's not possible. When you are trading with a broker, the fair thing is you execute your trades. The broker gives you the right to trade through its platform. Because in the past, and it's a very good question, in the past, only the rich could trade the markets. Because they had the money, they could go to the bank and make their trade through the bank. But nowadays, with the introduction of the brokers, the traders, they can trade online. So for the broker to give you, let's say, the right or to help you in a way to trade from your home or online, they charge the spread, which is their commission. So it's fair enough. Agree? I see very nice questions today, and they, let's say, raise more topics, and this shows that you are traders which you truly want to learn and get educated. Because, you know, even last, this Monday's webinar and today's webinar, for some traders, they might seem, I know about the introduction, I know how to choose my broker, but you know, with these startup webinars, you might see something that maybe you did not consider it in the past, or something that will help you for the future. Because whatever you learn, it's an extra tip. That's why we have decided to start first with some theoretical webinars and thereafter move on to the practical webinars. Because we want to ensure that everybody is on the right path, on the right way. Any final questions? What if I tell the broker that once I get big money, I will pay the spreads? Well, if it was like that, everybody will do it. But because the majority of traders, they lose money, 97%, which is a big percentage, your broker will not trust you. If he is a market maker, depends on how the market maker will deal with it. But if it's an STP or recent broker, this type of brokers, they care that the trades are done the right way, there is proper execution, proper communication with the liquidity provider, and everything is fair. Hope I answered your question. Any other questions? Something that wasn't clear? We still have some time. If you want me to go back to some slides to see something which wasn't that precise. Let's wait for a few seconds. Because I know that you are typing also, so it's faster to talk than, than typing. All right, traders, thank you very much for participating in today's webinar session. I'm looking forward to see you all in 2 days from now on Friday with the topic Trading Like a Pro, the basics to know. And in this webinar, we are going to show practical examples on the trading platform. I would like to thank you all and have a pleasant evening.